Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by taxbuddy.com, a leading online tax filing portal. Global cues on Friday itself, US markets ended mixed. Nasdaq was higher, S&P and Dow was down. And today Asian market opened is also mostly mixed. Japan is significantly higher. That's because of some political development. Other than that, many markets are down. Most of the markets are down. Hong Kong is down more than 2%. SGX Nifty opened positive, but immediately fell. And now SGX Nifty is more than 100 point down from the morning high. And not only from morning high, even on Friday's closing. And not only that, an SGX Nifty indicating a gap down opening below yesterday's low. So technically, opening above yesterday's high or opening below yesterday's low are considered to be significant. So the opening is definitely not really something good to start the new week. And again, it's not going to be a Monday mayhem. No, so things are not really that bad. So most of the markets are down but not out. And markets jittery will start this week. And that is mainly because of consumer price inflation data from US. So until that data is out, markets are likely to be volatile. So I think regarding the inflation data, I already spoke yesterday. So corporate results are also due in US also, and many banking results will be out towards the end of the week. And banking stocks have been underperforming for the last few days in US market. So if the results are good, though they may recover. But a key stock to focus in our market is TCS. So TCS has come out with results. The results were not that great. And even Infosys ADR was down on Friday. So therefore, we have to see how IT stocks perform today. And though crude oil is down a little bit today morning, but it was up nearly 6-7% from the recent low. So the crude oil is rising. So what happened in the last few weeks? Banking were doing very well, IT okay, and Reliance was dragging. And now we can expect IT to drag and Reliance may stabilize and banking may also support. So we don't know what is going to happen, but this is my expectation. And because the crude has come back from below $100 to 106, 107, 5-6% higher. So that is always good for Reliance. So the Reliance may not rise significantly, but may not fall much from here. So I think there is enough shorts are there. On Friday, the banking stocks were higher. The rally in banking stocks was very, very good. In a matter of Tuesday afternoon from 1 o'clock to 3:30, Bank Nifty fell 600 points. And after that, just Wednesday, Thursday, Friday, 3 trading sessions, the Bank Nifty shot up more than 1,500 points. So on Friday, particularly, ICICI Bank was doing very well, but HDFC Bank, even HDFC Twins were not doing well. But ICICI Bank was higher by 2%. That was the main reason why bank index was very, very high. But later I checked, though ICICI Bank was higher by 2%, the open interest has come down. So that shows that what happened in ICICI Bank is just a short covering, not a fresh buying. So if there is a fresh buying, the open interest should increase. So that has not increased. So now in the last 1 week, we can say it was a big rally from 15,500 to 16,250, 750 point rally in a matter of 5 trading sessions. And now it is time for consolidation with a negative bias, but until the US inflation data is out. And also the India VIX is likely to move higher And because for the last 1 week, India VIX has been coming down. Calls are written aggressively across every strike price, starting from 16,200 to 17,000. And so therefore, there may be resistance at every level. But at the same time, people are expecting a very good support at 16,000. So that is why 16,000 put option has been sold in huge quantities. 16,000 put has the highest open interest now. So SGX Nifty indicating opening around between 16,100 to 16,150. And I always say a big gap up or big gap down, there will always be some. If big gap down, there will be some recovery. If big gap up, there will be some selling. What happened on Friday also, there was a big gap up, pre-market indicating more than 100 point gap up. But what happened? The market came down later to test the previous day's close. Most of the time, big gap up, big gap down, market reverses and come nearer or test the previous day's close, and then only the trend takes place. So anyway, it is good for FIAs. FIAs are still holding about 74-75% short position in index future. So this kind of gap down, will give them an opportunity to square up their shorts. So overall, market can be expected to uh, trade with a volatility between 16,000 and 16,500. So let us hope we don't see more volatility like 1 or 2 weeks before. So a few weeks before, you may remember 100 point gap down, another 100 point fall, 100 point gap up, another 100 point shoot up. So I hope that will not happen. But anyway, we have to keep watching the India VIX. So the moment India VIX crosses 20, so that is the time to be a bit cautious for the next few days. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.